So now, look at this particular stock. What do you think I should do now? So the stock came in here. It did an area pattern here, okay? If you notice, there's a flat top here. It broke out, fell back in, went back to the low end of the channel, then started to climb, and now it's up here. With what you've learned so far, should I be a buyer or should I be profit-taking? What? Profit-taking. If I had the position, how much should I profit take? Half. Okay. Let's see if you're right. Anybody knows what this stock is? Not yet? Okay, I won't tell you yet because I have to ask you one more question. You just told me you would profit take with half, correct? So half of your position had just made good money, but the other half is still there. And that's what just happened. What do I do now? Do I buy or do I sell? You sell. You know what? That's the mission for today. I want you to go back to the market on Monday, and I want you to take away all the oohs in your trading life. Because it's that ooh that means you did not anticipate what was about to happen. Diba? Yan yung gulping gulat. Because you were not anticipating it and boom, you're there. If you're not anticipating and it's out of your realm of expectation, you're never going to know how to handle this. And here's where an uptrending stock turned around. Notice there's a big gap in prices here. See this? What normally causes something like that to happen? Why does the price just go from super nice, next thing you know, boom, it flatlines there? Why? What normally does that? News. What type of news? Good news? Bad news. And after it did that, it didn't even want to rally. It went down, gap stayed sideways, and then now it cracked your trend line. Something's wrong. And then it does that. Now my question to you is, if I still have it, what do I do? Okay, you sell. My next question to you is, when? Once? What did you guys say? You sell this when it comes rallying to that trend line, the red one. So if you see it rally back to the red line, benta na ninyo yan. Because this is just damage control already. You're not supposed to be there anymore. Just sell it at a better price. Don't be selling it when it's just, plummeting out like this. And you want to be able to sell it off the rally. So the volumes are better. It's easier for you to sell because you're not selling it at a crazy low. And so in a case like this, it can happen. This is GT Capital. Yeah, GT Cap. Right? Of course, they announced some news, clearly not good, and that's the reason why the stock attempted to reverse the way it did. All right. How do you know that the pattern is starting to end? Here are some readings. Volume begins to taper down. The narrowing of the range, as I mentioned to you earlier on, and the possible elevation or the degradation or a step down of the potential resistance. Let me just show you how that means. For example, look at this pattern of DNL. This has just happened not so long ago. Created a big pattern, right? Mind you, in case you don't know, insiders are buying the stock. So here they've been buying and buying and buying the stock. I noticed all that buying happening while it was falling down here. They were still buying all the way here. Some of them were still buying over here. So if I'm just looking at insider action, wow, you might be saying, wow, there's a pattern going in and the insider is buying, right? And all of a sudden that happens. And you get a breakdown condition coming into it. So what happened here? Here's where some people were talking about, oops, somebody might be raising the price of palm oil somewhere and might wreak havoc into some of their earning strategies. And there's a reason why you have that. But not knowing that, let's look now here. As the pattern is continuing on, look at the volume going down. As the volume thins, Remember, I told you earlier, at the end of a pattern, the volume dries up because there's no more shares to be bought or sold inside the range. So you see tiny movements in volume. You're getting ready. A little earthquake lang. Aandar na yung barko dyan. We just don't know whether it's up or down. But in this case, breakdown, step out. You can always go back to that pattern later when it looks better. But right now, in a breakdown condition, step out first and see what happens later. There are cases where I've seen a breakdown like that, smash itself, and eventually recover quite well. That's what happened to SSI. SSI broke down, fell down very, very sharply, but next thing you know, like a rocket ship, went back up. Okay, it can happen. But the whole context here is protect yourself first. Don't allow yourself to get murdered by what the price will do to you. Now, here's another one. So, in this particular chart, you have a winding pattern that takes place somewhere over here. Okay? And if you see this pattern here, this is what we call a rising wedge. It looks like a triangular pattern. It's starting to go up, 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 up. But the range of the pattern is starting to narrow. Now, the reason it narrows is because the buyer and seller are coming close head-to-head na. So if this was a fight between two people, they're getting into a fight, and at the end of it, mapapagod yung dalawa na yan eh. One will become the victor. And so as you're coming close to each other, they cannot anymore. They cannot, and people buying and selling cannot make money either. So a decision has to be made. So I've got normally a pattern. Very rarely will I see a pattern go all the way up to the tip and actually touch each other. It's very rare. When I say rare, I'm talking about 2% of the time. Most of it, you will all see patterns break before the completion of the apex. They normally will break in midstream of the pattern or maybe 3/4 away of the pattern. That's the time where the breakout will come. So that way you can also get some sensitivity to that. Also, look at the volume. You see the volume will also start to narrow before the breakdown took place. So use some of this learning so that you can say, oops, malapit na to. No more volume, the pattern's coming to an end. Now you're primed, you're now ready to be able to go into attack mode here or super defensive mode if you're holding the stock. But if you know what a rising wedge is, you should know already, that's a bearish pattern. Even though it looks like it's going up, that's a bearish pattern. Again, it's, how would I know it's bearish? Yeah, pull up your poster and you'll see it there. Okay? All right. Now, the elevation of support or a step down in resistance. This is a good example of how you can get a little awareness that the breakout is getting ready to happen quite soon. You have a sideways pattern over here, and look what happens. After falling to the low, rally back, falls back to the low, rally back. And after the rally, parang ayaw na bumaba, oh. It just keeps going up and down, up and down, up and down, but it keeps knocking on resistance door. It says, come on, let me go, let me go, let me go. And eventually, resistance just suffocates. You take all the shares out of the market, and boom, the stock starts to be able to explode. It just happened. Bago lang ito. And so you see the movement upwards coming from SM prime. So this is a very good inclination. I'll tell you why this is different. As I pointed out this morning, that took almost 2 years to build. If you go sideways in 2 years ago, you'll see SM Prime has been going up and down in an 8 peso range. And only now did it come back to this high point, create a pattern like this, tightly near resistance, and that already gave me, I said, oh God, malapit na ito. So if I am an aggressive trader, I would build a position in here before the breakout. Why did I do that? One, because the tightening of the range near resistance. If I am buying this now here, okay, near this resistance area, my stop loss will be this na. It will no longer be the lower end of this range. So now I can control my risk, and if this breaks out of that big 8 peso range, whoa, that's good upside for me. Okay? So look at that. On the bearish side, look at this one. This was the stock I was telling you about earlier, the one that didn't want to climb no matter what. And look what happens. So look at this. It tries to go back to the previous top, falls down. Then next high is actually lower than this one. Rallies back to that. So you can see a new range. And then falls back down. Next thing you know, it rallies up to here na lang. And then it starts testing, and look, now we couldn't even rally. It's starting to flatline near support. At that point, believe me, all the warning signs were already blaring. And if you could just listen to that, you would have taken yourself off that sense of hope before that particular breakdown actually took place. So you have to pay attention to what these things are doing so that you can align yourself better into the context of that potential move. Okay. Now, one of the most difficult things people do is recognizing a chart pattern. All right? How many patterns do you see here? How many? 3 or 4. Okay, you're going to have to teach me the other 2. Okay. There's an ascending triangle here, and there's a rectangle on top. Do you mind telling me what are the other 2 you guys found? Okay, remember the technique. Just mark out the tops and bottoms that you see are commonly near each other. Draw the line, and then call it for what it is. Right? That's a technique. Also remember this. Patterns don't usually appear when you see strong trends come. So it normally comes right after them. Remember, one of the reasons a pattern comes is because of trend exaggeration or swing exaggeration. So if you see a sharp up move, more likely a pattern will appear after that. And that's a staircase-like movement markets should make before when they come out.